Hey, it's Mike with AmeriFirst Financial. It's Monday, and it's time for your Monday morning mortgage update for the week of August the 29th. I hope everybody had a great weekend. I had a fantastic weekend. Enjoyed the cooler mornings, but the hotter days. In fact, a buddy of mine and I went on this great mountain bike ride and found a secret swimming hole. Right here in Shasta County. Pretty amazing. And yes, the water is that blue. Unbelievable. So let's talk about what happened last week with the market and what's going to happen this week. Last week, a lot of changes. We actually saw rates get worse than they started, and they started off in a locking position. And some of the things that caused these rates to get worse were stocks actually fell. The stock market fell 1,000 points on Friday, and the key to that was what Jerome Powell, who's our Fed chairman, said on Friday. And he basically came out from this big economic summit in Jackson Hole, Wyoming, and he said that rates are going to get worse. They consistently think that they're going to be raising these rates to fight inflation. There's absolutely some signs that we're having some problems. And so there's not going to be any relief, at least according to what he said. And the market really reacted pretty aggressively. Also, PCE, which is an inflationary report, came out Friday. Inflation was up. No surprise there. So what are we looking at this week that is going to move the market? What are our three things? Jobs. Big jobs week. A lot of jobs reports are coming out, some housing data, and central banks around the world. So jobs week. We've got a lot of reports coming out this week. In fact, I want to show you really all the reports that we're going to see this week. And if you look at this calendar for the economic week, you can see on Wednesday, ADP private payroll, which is payroll for private industry. We have purchasing index on Wednesday. On Thursday, we have all the non-farm productivity, jobless claims, unit labor costs. On Friday, the big one, unemployment rate. So just every day this week, starting Wednesday, Thursday, and Friday, we're going to have a lot of jobs numbers coming out. And look, if we see that jobs are falling, unemployment rates up, then that means a weakening economy. And we've talked about this. That means rates could be getting better, but that's not the case because inflation is really the kryptonite here for mortgage rates, and that's not improving. So we'll definitely be watching to see what our economy's doing now and what it looks like it's going to be doing in the future with these jobs numbers. So the second thing is housing data. I'm going to leave it on this calendar here because you can see Case-Shiller is coming out tomorrow on Tuesday, and the Case-Shiller is the benchmark for looking at home price indexes and what the housing market's really doing. We're also going to get FHA home prices. Those kind of mirror each other. And then some other data is coming out. One thing that we don't pay a lot of attention to, but it's a really key indicator of a recession is consumer confidence. If consumer confidence is low, we typically know that a recession is coming, and it's been low. It's been low month after month for quite some time. So we'll be looking at that on Tuesday. Then the third thing is the central bank. So our central bank has been raising their Fed fund rate. We know this meeting after meeting to fight inflation, but central banks around the world really have been dragging their feet. Well, now they're starting to realize that they have a problem, and we're going to be looking at what those central banks have been doing this week. And so when the central banks around the world actually drag their feet, it actually has strengthened our dollar. And that's a good thing. But now that the central banks around the world are starting to realize they need to make some choices, if they start raising their Fed fund rate or the equivalent of that, that's going to weaken our dollar. And actually it worsens our inflation. So there's just a lot of data out there and a lot of things that are happening that is indicating that our inflation isn't going to improve in the near future, which is causing those rates to go up, the stock market to sell off, many things. So what are we looking at this week? We're in a locking position. We think that rates probably are going to get worse this week. So we're not playing with anybody's money. If you know somebody that could benefit from this video, please forward it to them. If you have any questions about rates and what the market's doing, don't hesitate to give me a call or reach out to me. Have a wonderful, productive week, and we'll talk to you soon. Bye-bye.